My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we got a special guest zooming in who's got a lot of experience in real estate. Colby Swartz has been a GP in his own projects, and most recently he started to work with a family office, Birkentine, that does a whole bunch of stuff. They are builders, they've got rental homes, they are land developers, they're build for rent, they do all sorts of things. So I'm really interested in talking with Colby today about the difference between how a family office looks at real estate versus a lot of the rest of us. So Colby, welcome to the show. Great to have you.
Thank you, Dave. I appreciate you inviting me, and it's great to be on here.
So for folks that aren't really familiar with what a family office is, can you just kind of zoom out, give us a big picture perspective of what it is, at least what your understanding is now that you're working?
Yeah, I mean, listen, I think the term family office is loosely used, particularly coming out of COVID. But that said, generally speaking, it is a family that has high net worth that continues to have a long-term perspective in investing in capital preservation, trying to keep as much under control under their umbrella as possible. And doesn't really fray or divvy too much outside of that. If they do look to align themselves with additional capital partners outside of debt, it's usually other families. So it's typically high net worth families or a high net worth family that uses their own capital and looks to specifically diversify that in different risk parameters across different investment theses and different appetites. It just so happens that my real estate family office that you had referred to earlier, Birkentine, heavily focused in real estate and real estate development here in the U.S. Started off in the Mid-Atlantic, and we've expanded outside of that up and down the East Coast and across the country. But yeah, whether it's entitling land, whether it's building rental properties, whether it's building fee simple for sale product, on the retail side of things, and playing kind of up and down that risk parameter within real estate investments, we do that. And part of my joining of the organization several years ago was to help really, I say corporatize the organization, which is essentially cross the T's and dot the I's. As you all know, when you don't really come from per se corporate America, rules of engagement and thinking, whether it's inside a box or outside a box, there's not always those certain pieces in place, particularly when you look to scale. So I think, as family offices evolve and whether that's, classified as, 10, 20, $50 million in cash or equity to billions, which a lot of family offices are now. You obviously got to grow with the times and evolve. Obviously, the more money, the more risk, the more parameters and guidelines you put within those investment perspectives.
So, Colby, how long has Birkentine been going on as a family office?
Started off essentially 37 years ago. Started off as a fee simple home builder. And then really the second generation came into the business about 11 and 12 years ago. That jump has been very interesting. And that's when, in my opinion, when the organization became a family office. When you look at real estate developers or builders, there typically tends to be a mindset difference or shift when you're a home builder to when you're a developer, and then you're thinking long-term and you're building rentals and cash flowing assets and things like that. And, it's quite stark sometimes. And that's sometimes why you see home builders, kind of ebb and flow with the times, and there's business revolves around the sale and the market. And, it takes a long time to develop, or I should say entitle, build, develop projects and product. And, from that start to finish, that can be 3, 5, 7 years. I mean, sometimes longer. And we all know how markets can shift and change. And sometimes that's a different, different animal for home builders to, to handle and get involved in versus if you're a diversified family office where you have different, cash flowing assets to different investments and different risk perspectives with diversified product. It allows you to ebb and flow and continue to grow at a pretty good clip without using outside equity.
So Colby, you've been working with this family office for several years now. What were you focused on prior to that?
Prior to that, I more or less was focused on ground up development in tier one cities. So did a lot of ground up development per se in New York City. That's where I had lived for 15 years and had done development in other, major markets across the US. And that was more or less condo from a residential perspective or hospitality development, meaning, hotels, bars, restaurants. And that could have been anything from obviously the real estate perspective to very much understanding the operational overlay or components within those assets. And then, really had an opportunity coming out of COVID to really help, like I said, corporatize / institutionalize a company and organization. We all know what was happening in New York City, and it was just one of those opportunities that was the right place at the right time. And I'm incredibly grateful and thankful for it. The types of deals we do, at the scale and efficiency we do them, the more access you have to deal flow and execution within the real estate investment world, which is why I love this business, because every deal theoretically and is different, and you should learn something new that you're never going to learn in a grad school graduate program. You should learn. And so, we, with who we are as a company, the second generation coming into the business and really looking to take the organization to the next level. I'm one of the non-blood executives within the company. And we're fortunate that we all get along. We can have the tough conversations if need be, but there is a long-term generational mindset and wealth. And it's just a much different beast than a capital group or partner that needs to check a certain box to, cover their rear ends if something were to happen. And it's about unrealistic, projections and assumptions and things in order to put money out on the street to get fees and things like that. And I'm not saying there's anything wrong with that. That's a lot of our business, but, when you're not specifically focused on hitting a certain business plan or IRR or something within, 3, 5, 7 years, and you're really focused on, again, long-term capital and property appreciation. It's a different philosophy, and very grateful that I'm here.
So with Birkentine, you've got a combination of kind of build to sell, and then it looks like build to hold. What percentage would you say is which?
I'd say about 90% of our business is ground up development and building rental product for the organization and family office to, as I say, clip the coupon, right? Again, what makes us different than the majority of the probably, real estate developers across the country is, within the capital stack, the equity that is involved, that is our family office, our family money, right? So the business plan is to, get creative capital structures to, again, build the project, stabilize it. And then once we do that, refi, hopefully you're getting a lot of cash back out. And then, a large difference is on that month over month net cash flow coming in, that rolls back up into the company and organization and can be redeployed however it may be versus, large LP distributions going out. And so with that philosophy, we aim to deliver anywhere from 1,000 to 1,200 rental units a year. And that could be single family townhouses. That could be multifamily apartments. We build a lot of properties within major submarkets and secondary markets. So you can really build communities within communities and kind of work them up and down the value chain. So starting at maybe a loft-like or garden-style apartment, and then moving yourself up to a single family attached or detached home, allows you to kind of scale up and down with that property. And so that being the mindset, obviously that's probably, again, 95% of business. We also do build and sell what we target anywhere from 150 to 200 I say units. It could be lots. It could be fee simple for sale product to the end user. That we would spec build and sell you a $300,000-$400,000 townhouse in a major submarket like i.e. I'm close to Baltimore, so just outside of Baltimore County, or one of those little tertiary commuter pockets that have good economic drivers and reason to build there. We deliver, like I said, probably 1,200-ish, give or take, units a year. The majority of them are for us with the intent to retain, and then there is a small portion that we will build and sell on the retail side, or we'll also sell finished lots to national home builders. National home builders that are publicly traded don't really have the risk appetite or perspective to get in the land development world anymore, when you don't really per se have a allocated time frame that fits with what you deal with when you're going through entitlement and the unknowns of when you're going to be able to get approvals and move forward. It's a very diversified real estate development company that builds different rental products. We do have some retail. We do have some industrial warehouse that we build as well. That's in addition to what I mentioned, but majority of what we do is residential and from a rental perspective.
Very cool, Colby. No, that's very, very interesting, how it's structured. So give us an idea. You must have a pretty massive crew. So what does the family office, let's say the core group, kind of look like on site in the office? And then how many employees do you have actually building all this product?
Yeah, so what makes us unique is we say we're a vertically integrated company and organization. Depending on I'm sure you've spoken with, hundreds or thousands of individuals that play within different realms of investing or real estate. Generally speaking, when you're, on the capital side of things, which we are, you can be very light from a human capital perspective, right? Like, it doesn't take a lot of people to run, a couple $1 billion in investment and thesis if you're just really allocating those investments to different projects or opportunities, and you're more or less just acting from like an asset management perspective. We are much more human capital intensive, I'll say, than most organizations or individuals, or I'll say businesses, excuse me. And that's because we do have property management under our umbrella, and we do have a general contracting side of the business as well. And those are very human, labor intensive, right? So on the general contracting side, listen, we do sub out a lot of things to major contractors, but again, what that allows us to do is to act much more nimble, much more efficiently. It allows us to, just from a different underwriting perspective when you can do that when you're working with banks and things. But again, the difference is that we have excavators, we have, site managers, but what we can do is we can cut down on some of the exorbitant fees and overhead that, get allocated when working with certain, general contractors or subs. Property management side, over the last 5-10 years, it seems like anyone and everyone has come out with some sort of, next best thing since sliced bread from a property management operating system perspective to cut down on the human interaction and that cost of labor on that side. But ultimately, when you are building 200+ unit assets, that human interaction is key and vital. And so, those two sides of the business are very much, probably, I'll say, 80% of our overall workforce. I should know this because I just got the update from my team on Monday. But we hover right around 200 employees, give or take, and again, that the way that we break down our properties and our projects, and that we're able to, move individuals from site to site from a construction standpoint, that allows us to, maneuver and try to keep some wraps on that side of the business. Property management, when you have 3,000 units under construction and you're looking to continue to build and do in different places, you're always going to be adding people to that and overhead. So that will that will start to continue to outgrow the construction side of the business. But, for the time being, we like the controls, we like being nimble, and, like dealing with less questions being asked. And, when we make decisions, we move forward versus kind of going through a long, tedious process or whatnot that, doesn't really lead you anywhere or, holds you back to a certain point.
Colby, this has been very, very interesting. Thanks for kind of explaining how
Yeah.
your particular family office works and comparing and contrasting to what most people or other companies are doing. If people want to connect with you and find out more, where should they go?
Yeah, I mean, you can find me on LinkedIn. That's Colby Swartz. Birkentine Real Estate Group is the organization. You'll see my beautiful mug pop up there. You can link with me there. That's probably the easiest and most effective and efficient.
Fantastic. Thanks for being on the show.
Thank you, Dave. Appreciate you having me.
All right, everybody. Thank you very much for tuning in, and we'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.